In this video, I'm going to talk about the source documents in accounting. We know that there are different types of transactions occur in a business. For example, cash receipts, cash payments, petty cash payments, maybe credit purchases. So the owner or the management of the business cannot keep all these information of transactions in their memory. Therefore, as and when transactions take place in a business, the business prepares certain documents, including all the details of transactions. And we call these documents source documents. So in simple terms, source documents are the documents that contains details of transactions. So what are the details of a transaction? For example, date of the transaction, then the description of the transaction, value of the transaction. Remember, a source document has a serial number in consecutive order. So remember, source documents provide information of transactions or details of transactions to record in prime entry books. Moreover, these are initial documents or original documents that contain the details of transactions. And also, these are written evidences of transactions. Therefore, source documents play an important role in the process of accounting. Remember, there are different source documents depending on the different types of transactions. So let's go through some of the main transactions and their relevant source documents. The first transaction is cash receipts. Now this means when the business receives cash from a transaction. The source document is cash receipt. And then cash payments. This means when the business makes a cash payment. The relevant source document is payment voucher. Petty cash payments. This means when the business makes a petty cash payment. For example, payment of postal charges. So in this case, the source document is petty cash payment voucher. Then credit purchases. This means when the business purchases goods on credit basis. The relevant source document is purchase invoice. Then returns outwards. Return outwards are the goods returned by the business to its supplier or the suppliers. So the relevant source document is debit note. Then credit sales. Credit sales means when the business sells goods on credit. The relevant source document is sales invoice. Returns inwards. Returns inwards are the goods returned to the business by its customers. So the relevant source document is credit note. Then deposit of cash or check. Here we use the deposit slip. There is a cash deposit slip for the cash deposits and a check deposit slip for the check deposits. So commonly we can say deposit slip. Then issue of checks. For this we use counterfoil. And dishonoring of checks, the source document is check return notification. Then direct remittances, stand-in orders, and bank charges. For these transactions, we can use bank statement as the source document. So remember, all the source documents are not prepared by the particular business. It can be prepared by another party. For example, bank statement is prepared by the bank. Even check return notification is prepared by the bank. Then finally, the other transactions. The relevant source document of this is journal voucher. So these are the common source documents used in accounting. I hope you got a clear idea of what source documents are and the examples for source documents depending on different transactions. So remember, by using the information of transactions in source documents, we record transactions in their relevant prime entry books. For example, by using the information on receipts and payment vouchers, we record these cash receipts and cash payments in the cash book. And cash book is one of the prime entry books. And also using the information on the petty cash payment vouchers, we record petty cash payments in the petty cash book. And again, petty cash book is one of the prime entry books. So I will do a separate video for prime entry books. Make sure to watch it. Okay, then see you in another video. Don't forget to subscribe.